Good morning. Today is Wednesday, July the 5th, and today is the day after US independence holiday. Of course, yesterday market was closed in the US, and today what we will do is basically do a recap and a look out as to what the market may do in the coming days. And because it's a shortened trading week, market activity tends to be a little bit quiet, and there was hardly any volatility in the markets over the last 48 hours. Now, over in the Dow Jones itself, we can see that last Friday we have seen the Dow Jones rally to 34,467, just a touch below the year's high, not the year's high. The year's high is at 34,712. What we are saying here is that the June high is 34,558.7. So basically what we have here is that the market is trying to rally, but however, we have found that this year the Dow Jones has been lagging behind the other two major equity index. We are talking about the S&P 500 and the Nasdaq 100. So basically, if the market pulls back, it's going to happen in the Dow Jones more likely than in the S&P 500 or the Nasdaq 100. That said, I think the market right now is in that sweet spot in terms of risk-reward perspective. If I have to trade the Dow Jones itself, I will be very happy to actually take up a counter trend trade to sell anywhere between 34,170 to 34,712. Now, the high traded on Friday was 34,467, close enough. And I think that will be actually a signal for me to actually go in to sell right now, putting a stop just above the year high, which is last traded in January of this year at 34,712. So that will be my play if I have to do this. Now, my target for this run, okay, is at 33,230, 260 to 33,500. So we have quite a bit of a downside potential here with very limited risk if this index is to be traded. Now, over in the S&P 500, I mentioned that the market here is a little bit firmer than the Dow Jones itself. In fact, on Friday, we see the S&P 500 register a new high for the year at 4,458.5, and it did close on a high note. In fact, it has the highest closing this year. So that means the market still have a little bit of buying momentum behind it, but it will be very interesting to see if it can sustain. I would suspect that because it's a shortened week, market may tend to want to take profit ahead of the non-farm payroll, which is going to be due out on Friday. But principally tonight, at 2 a.m. Singapore time, there will be a release of the FOMC meeting minutes, meaning to say that people will have a chance to take a look into what was discussed in their last FOMC meeting, where the Federal Reserve decided to pause interest rates. So that could also be a game changer going forward. We want to see how many governors are in favor of hiking rates, how many are in favor of pausing, and if there's going to be any governor suggesting that they should be cutting interest rates. So the minutes itself will provide some kind of insights as to what the policymakers at the Federal Reserve are thinking. So that will be the highlight for today itself. Over in the Nasdaq 100, we see that the market has been trying to go higher, but however, that said, the market did not quite register a new high going into last Friday's trade. You can see that the last Friday's trade remains the high traded 2.5 weeks ago at 15,284.65, was not breached on Friday. The market high traded on Friday was 15,233 thereabout, and this is within the bracket of prices. Again, based on the S&P, based on the Dow Jones itself, I also feel that this is quite a great counter trend trading opportunity. If I can sell somewhere between 15,240 to 15,330, I think that area actually offer a very fantastic trade setup on the downside by selling this index and putting a stop just above 15,285. Okay, the downside potential, at least for now, I would think could be limited to maybe perhaps 14,500 to 14,635 thereabout. So we can see this as a technical pullback, possibly for another run higher at some point in the near future. Again, this is what I think may happen. Over in Asia, we can see that Asia market has actually also reacted to the idea that the market was very, very thin. In fact, when the Nikkei opens this week itself, on Monday, it actually opened with a challenge of the 2.5 weeks high at 33,772. 2.9. The high traded on Monday was 33,762.8, just a hairbreadth away from taking out the year's high. Now remember, the Nikkei 225 has been on a tear the entire first half of this year, and we have just finished H1. H2 is just ahead of us, and whether this momentum that we see in Japanese equity market can actually sustain beyond what we see in March, in June itself, remains to be seen. However, we are beginning to see some kind of profit taking. Yesterday, we have a bit of a pullback, and this morning we see further profit taking that is obviously in play right now. And if this profit taking continues, there is a likelihood that it may continue to pull back all the way to 32,000 to 32,300 levels, and this area is going to be crucial if this market can hold at this current at this range of prices. There's still the prospect of higher prices going forward. However, that being said, if the market declines sharply below 32,000, that will be a different story altogether. For the time being, there is still the call for extended run in the Nikkei 225, perhaps going to 35,300 thereabout. Over in Hong Kong, we see the technical rebound that we have seen quite obviously is happening right now. The Hong Kong market actually rallied to 19,450 thereabout, and this is a three-wave rally. Now, this is the concern here. If this is a simple three-wave, it implies that the market is probably heading lower again. Now, the fact is that the market was able to hold at 18,800 levels, 850 levels. It shows that the market may have some kind of support here, but we will have to see how this thing play out. For the time being, because it is a three-wave rally and the market has already done a three-wave equality move, the odds is that it may come back down into this bracket of prices between 1800 to 1800 and 850. Okay, so let's watch out for a three-wave pullback before the market attempts to do another rally attempt. Over in the Shanghai Composite Index, you can see that again, this morning, Caixin, the manufacturing PMI has shown that the manufacturing sector in China has softened again. So this is definitely not a good background for rally in Chinese equity market. So that said, it is favoring the downside, at least for the short term, based on what we have seen this morning in terms of the PMI data release. So let's say that if overall, if the market doesn't drop too much, it can actually stabilize and at some point challenge the 3,276 and perhaps even over time to 3,370 to 3,450 levels. In energy markets, we can see that the WTI, which is the West Texas Intermediate Crude Oil, has managed to hold on to its gain, although the market actually dipped early part of the week itself to $69.66 before we saw a bit of a rebound yesterday, and currently is trading just under $71 with the prospect of an extended run beyond $72.68, which was the high traded in June itself, perhaps going into $73 to even $74 bracket. And this is where I think I will take profit. I'm basically long both the Brent and the WTI, and I'm looking to take early profit here. Let's see what happens. Over in the precious metal market, we can say that precious metal market haven't, especially gold, haven't dropped momentarily below 1900, has now rebounded from a low of $1,893 to as high as $1,930, and this is actually more than $40 from where the bottom was just last Thursday. So this could be what I call a bear trap. Market basically trigger a lot of stop below 1900 and then basically do a fake move and rebound. And if the market can sustain above 1,940, it could have a possibility to go beyond perhaps even 1,973 towards 1,983 levels. So this is actually a bullish setup in my opinion. But again, the overall look depends as to how far this market can go. Okay. Over in the silver market, the market has been basically sideways. There was no major excitement in the silver market. Market remains high at $23.07 on Monday, and market has been flatlining the whole of yesterday. Currently it's trading at $22.92 or 94 cents thereabout. The immediate target is about $23.27 to $23.50. So very little upside potential here, at least for now. In the dollar rates, you can see that the dollar index has been struggling. It did a three-wave rebound from 101.48 all the way to 103.23, which I believe has already completed this technical rebound and it's probably geared to test the downside, possibly even taking out the 101.48 low that we saw in June itself. So over here, if you want to take advantage of this potential drop in the dollar index, the area to do so could be, in my opinion, at 102.83 to 102.93 levels. The high so far as we are speaking is 102.83. So it has basically brushed the bottom end of this bracket of prices. So it may continue to edge higher. It may have already hit the sweet spot and getting ready to trade to the downside. So I'm actually a little bit bearish on the dollar itself. Now, if that's the case, euro dollar tends to want to benefit. So we'll see whether the euro dollars can sustain its rally from 108.35 low that we saw on Friday itself. So basically, there is the possibility the market may have already bottomed, because it too has done a three-wave pullback. Although it was less than ideal because there was no equality move. The equality move is somewhere 108.09. Ideally, I would love to see prices go back to 107.70 to 108.10 levels for me to actually complete this three-wave pullback for a more sustainable rally. But there is a possibility the market may have already bottomed and it's getting ready to rally. But okay, so if you believe the euro dollar is worth buying, maybe you should start taking up positions. In the sterling itself, I also see the possibility of an extended run in sterling. Market has actually pulled down in a three-wave corrective pullback from 128.48 all the way to 125.91, and the market now has stabilized. And after this big run-up on Friday itself, the market traded to a high on yesterday at 127.40 levels, and if the market can pull back a little bit again to 126.50 to 126.65, and the market could be getting ready to rally to take out the 128.48, possibly going to challenge the 133 levels. This is my immediate target for this run. Over in the Aussie market, Aussie has been a dilemma because I have no idea which way it's going to go. But now, after yesterday's run up to 0.6705, I think the market is telling us that it's getting ready to rebound, at least in a technical three-wave rally here. So if the market do pull back to 0.6640 to 0.6650, that level could be a good level to pick up some more long position if you have already long, and if you have not, that could be a good area to actually position some long trades for the possibility of a three-wave corrective rally, possibly to 0.68. In dollar Canadian, we are also seeing something very similar. The bottom out at in the dollar CAD is at 131.16 and went up to 132.85 before pulling back to 132 even. And this market could be getting ready for another extended run in a three-wave rebound to 133.70 to 134.10 thereabout. So this level is actually hitting the fourth wave of one lesser degree in the Elliott wave count. So this probability is actually pretty high here. So if you want to take advantage of this technical pullback, the dollar CAD do offers you the possibility of buying within 132 to 132.20 levels. And over in dollar yen, we are beginning to see the signs that the speculators are becoming very concerned about any more pushing the dollar yen rate higher beyond 145. You can see that the 145 level was actually traded at the end of last Friday, and since then the market has never really seriously contemplate going higher. We have seen a three-wave pullback, very, very minor, and there is a possibility if prices do not go up soon beyond 145. This could prompt those people who have gone long to actually take profit, and if everyone do the same thing, it may cause a sustained decline in the dollar yen rate. So the key here to watch if you want to do counter trend trade is to do a short, speculative short position of 144.75 to 144.90 levels, and then watch how the market reacts if and when it comes and tests this near-term support line here, somewhere at around 142.10, and if the market do break and close below this level, then market could be gunning for 140.25. Okay, there, so we could see quite a fair bit of a move potential here. Okay, over in digital assets, we can see that the Bitcoin has also been struggling. It has not lost value, but I think we are beginning to see a little bit of concern. Market needs to take out $31,450, $31,500 $31,500 soon, because any delay in clearing this 31,500 may actually prompt people to take profit, and that could be not a good sign. In the meantime, there was one attempt to go higher on Tuesday itself, which is yesterday, at 31,378, not quite making it at 31,458 that we saw 2.5 weeks ago. Okay, so we can see that if that's the case, if market do pull back, do not panic. I think this could be a buying opportunity here. Anywhere between 28,900 to 29,450 are basically an area to look out for buying opportunity, because this could represent a three-way pullback. And if the market can stabilize here without breaking it, there is hope that the market can actually rally higher. My target immediately is just under 33,000. So this is all I have for you for today, and tomorrow I'll give you another update. Bye bye, take care.